What is up, YouTube? I'm Adam Odell, Chief Investment Strategist of MoneyMarkets.com. And for the first time in several weeks, I'm rejoined by my research analyst, Matt Clark. We had a couple of other episodes that we've aired recently, but we're back in the saddle and we're back with our normal routine of answering all of your most pertinent and fresh off the top of your mind questions. So Matt, I think you've got a juicy one for us today. Let's let you take it away.
Thanks. I don't want anyone to think that you and I are on the outs or not talking, because we actually talk just about every day. We just weren't able to get into record these because we had some other things going on. But yeah, we're back, and I do have a good one for you. And I kind of want to gear this towards just talking about the stock itself, because once I reveal you the question, then you can kind of see why I just want to keep it along the stock line. And we had a reader who recently asked our opinion on the new stock that is Digital World Acquisition Corporation. It trades on the NASDAQ. The ticker symbol is DWAC. And the reason why I want to stick with just strictly the equity and not anything else is because this is a SPAC, or a special purpose acquisition company that has been started by the former president of the United States, Donald Trump. It's kind of, since its release, it's kind of all over the place here. But I want to get your insight and your thoughts on this particular SPAC. And SPACs have become wildly popular. Nice way for companies to avoid the whole IPO roadshow and process. Because what a SPAC does, just to kind of recap, a SPAC raises capital, then uses that capital to buy a private company, and then through a reverse acquisition, then makes that company they purchased, the pro forma company, then becomes public without having to go through all the IPO filings, the paperwork, the roadshow, the monetary drop into whichever exchange they get on. It just avoids the whole process. So SPACs become very popular, not just with private companies, but with investors as well. So give me your thoughts on Digital World Acquisition Corp.
Yeah, so first of all, you sounded a bit like me about a week ago when I was trying to explain to our son's both sets of grandparents who were in town for his first birthday what a SPAC was. And I think about 45 seconds into my explanation of what it was, my wife was like shooting me glares from across the table, like, this is not that interesting to everybody else, but maybe only to you. But yeah, I mean, SPACs are obviously hot right now. What I'm more focused on in this market environment is the retail participation. And that is basically new traders who are opening up new accounts and funding those accounts with maybe small dollar amounts, but collectively they are moving markets. And this is something we started seeing, back when the GameStop basically short squeeze happened. And I remember distinctly a lot of analysts and pundits were saying that this is a one-time thing, that this is basically, that all the retail money was just going to go poof and that it's going to be gone. And that, they would, the stimulus checks would run out and they would go back to work. And this was like a flash in the pan. And here we are, however many months later, and we've seen a number of other meme stocks go vertical. We've seen the activity in the SPAC market. For me, I don't necessarily want to trade a SPAC just to trade a SPAC. I'm going to pass. I'm going to punt on giving you my opinion on DWAC. I'm not going to make it. It's a politically charged, call, obviously, and people either love or hate him. So I'm not going to go there. But I think the broader message, what's more important for listeners to understand, is that we're in like a once in a lifetime opportunity where the retail crowd is more in control than Wall Street's ever seen them. And they are moving stocks and they're moving them fast. Now, I think that a lot of people are being misled. They're being misled into stocks that pop for a day or two or for a week or two at a time. If you look at DWAC, it's down 60% from its highs. So if you didn't get in at just the right time, you're probably down on the position. And that's really, this market is moving fast. So what I actually look for in my service, one of my services that trades momentum is called Home Run Profits. And I've basically been trading the same strategy for over 10 years now. We're looking for stocks and ETFs that are hitting their point of maximum momentum, but a sustainable amount of momentum. That's what a lot of people are getting wrong about these meme stocks and these SPACs, is that the momentum is short-lived. It's not sustainable. So unless you get in the first hour of the news hitting, then you're probably going to be buying late, and you're probably going to be buying at high prices and selling lower. So what I'm looking for is sustainably maximum momentum, where we can be in trades for 2 to 3 months at a time. This is not a market where you're trying to hold stocks for 3 to 5 years at a time. This is also, in my opinion, not a day trading market, because the prices are just too volatile. But I have a system that finds maximum momentum over a 2 to 3 month period. That's swing trading. Okay, so you can get into a position now and hold it for a couple of months at a time, and we're getting gains well over 100% in a lot of our plays. So that's really what I see about this. I mean, like I said, a lot of people think it was a one-hit wonder type thing with GameStop, but we're seeing this sustainable. It won't last forever, this window of opportunity. I'm thinking it's going to be at least another 12 months, maybe a bit longer. But I'm really trying to get the message out to folks that this is a trader's market, and there's really no better time to follow a momentum trading model than right now.
And we talk about this a lot, not just you and I, but we've talked about it on Money in Markets. Our mantra here: buy high, sell higher. And I guess, a lot of people will ask me whenever I say that, well, that doesn't make any sense. Doesn't it make more sense to buy on a dip when the price is low? And I say, no, it doesn't necessarily make sense, because you never know where that dip is going to be. You never know where that bottom out is going to be. But if you look at a stock that is showing strong momentum and sustained momentum, I think that's the important thing here. It's not just momentum. It's not just 1 day or 2 days of a pop. It's sustained momentum over a course of time. Then you're buying a stock high, but that momentum is going to carry it higher to show you, even more gains. I guess, expand on that a little bit and maybe give a little bit better explanation than what I just did.
Yeah, so a lot of people think that buying low and selling high, I mean, that's the maximum you hear. That's Warren Buffett type of investing. But I've worked with so many retail investors over the past 10 years who are more conservative in nature, who write in to tell me, I'm waiting for valuations to come back down. I'm waiting for another washout, and they've been waiting this whole time. And that's the problem with buy low and sell high, is that you don't know when that opportunity will come. And most of the time you let an entire bull market pass you by. I mean, this has been called one of the most hated bull markets in financial history, because coming out of the 2008 great financial crisis, everybody was burned, and they thought, that the rally into 2011 wasn't sustainable. And then we saw 2013 go gangbusters, and we thought that was the end. I say we, a lot of market pundits were doubting the bull market this entire time. But studies have shown that buying stocks as they're making new 52-week highs is a better strategy overall than buying stocks that are hitting new 52-week lows. And you would think that buying the lows would give you better prices, and you're buying low and selling high, but really this is a market that keeps chugging higher. And we've made, over the past 10 years, I work with a lot of retail, regular folk investors who are new to trading this type of a strategy, momentum over 2 to 3 months at a time. And we've been doing it successfully since 2011, this whole entire bull market. And the bull market is not over. We're just now seeing, so we got a dip in September, right? Everybody was freaking out because we hadn't had a dip of 5%, and we got that in September. And now all 4 major US stock indexes are making new highs at the same time. That tells me that the bull market is healthy, and we're seeing some accelerating momentum moves like we're seeing in Tesla this week, the past week or two. My Home Run Profits subscribers are actually in on a trade that has exposure to Tesla, and they're up like 250% right now. So these gains are coming fast, and but you have to know where to look for them. They're not necessarily in the SPACs that you read about. They're making headlines one day and then popping and dropping, but they are being detected by my system, which finds maximum momentum. And really, I'd love to help as many people try to trade this strategy and trade this market environment, because this is like a once in a lifetime opportunity. We don't get this type of market all the time.
Now, I'd be remiss if I didn't ask you, last week, you actually had a seminar that was open to kind of talk about, a lot of things related to the strategy that you're speaking of. So I guess give me the 30,000 foot view, give us, the listeners, the viewers, about a 30,000 foot view on this. And then we'll also kind of have a link up top to where people can find out more information about what this is, but kind of give me the top level view here.
Yeah, so markets go through 2 phases. They go through a phase where they're not trending, and then they go through a phase where they're trending. And part of that trending phase is accelerating momentum. And really, the name of the game is to be in the markets and in the stocks that are showing those nice trends, and then being out of the stocks when they're consolidating and they're not really trending, if they're just choppy. And really, that's something that my system detects. Now, I used to trade a hedge fund, commodity markets, equities, bonds, currencies, commodities. And what we saw is in a lot of the more mature markets, like the S&P 500 is probably the most investable market. Anybody that's wanting to hedge a large book globally of equity market positions, they're hedging in the S&P 500. So that's a mature market, and you don't see the smooth and accelerating price trends that you get in less mature markets. Whereas in less mature markets, you can see these price trends just take off. And a lot of what it comes down to is retail participation. So in a given market, who is the dominant market participant? If the dominant market participant is large institutions that are hedging and that are playing short-term mean reversion strategies, like you'll see in the S&P 500, your opportunity to make large gains fast in a momentum market are lesser. But if you're in a market that's driven by retail investors who are willing to, bid up prices higher and higher because they don't want to miss out. It all comes down to FOMO, right? That's the type of market that you can really make some great momentum gains. So my system is designed to detect those types of markets and get our subscribers in for 2 to 3 months at a time. We take our profits when available, and then we move on to other markets that are showing better opportunities.
And we are, like I said, he had a seminar last week, but that is still open and available for people to check out and get more information about. We'll put a link up top here to so people can find out more. Because I think I know the ins and outs of it, but that because it's my job. But I think a lot of people get very excited about what you have to say here and this strategy that has worked, not just today. It has worked for years. You've been employing the strategy for a long time, and it has paid off. And it's paid off for a lot of people. And our goal here is to make that pay off for even more people. It's not about me. It's not about you. It is about how we can help everyone really play this market and be successful in playing that market. So, Adam, that's the question I have for you. You artfully dodged DWAC, and that's fine. That I understand that. I probably would too. I had tempted myself to do it and to talk about it in one of our videos on YouTube, and I thought, no, I'm not going to do that. As of recording right now, DWAC is actually down 9%, 9.5% on the day. As we're recording this right now. So for whatever that's worth. But I do encourage everyone not only to check out Adam's services, check out moneyandmarkets.com, and also check out all the great stuff we have on YouTube, including the Ask Adam Anything, which we do every week, Investing with Charles, where I sit down with Charles Sizemore, Green Zone Fortune's co-editor. We talk about all things that are market related, including comparing stocks and talking about different sectors and how to play that. We have the Bull and Bear podcast, as well as the marijuana market update. And all these are done every week. So if you aren't subscribed to our YouTube channel, make sure you hit that subscribe button, mash the notification bell right next to it, and get notified each and every time we post up a new video. Adam, that's what I have for you. Look forward to now getting back on track after you just dismissed me for the last 4 weeks and getting back on track and doing this again next week.
Sounds great, Mac. We're back in the saddle.